Hey CGS investors, it is Wednesday, December 4th. Taking a look at the charts, markets had another nice move today to the upside. We saw the SP 500 go from an oversold territory down at this pink line, which is the 20-day moving average on the 30-minute chart, which you can see was over here on the daily chart. And from there, we've gone from an oversold, and it's had a nice run up. It gapped higher today, continued to run into the closing bell, with technology really leading the way. If we look at the core sectors here, there were a few sectors up, but the biggest one definitely was technology, and that is the heavyweight champion, which drags these markets up, which is why the Nasdaq rallied the most out of the markets. The large tech dragged up the Nasdaq 1.25%. SP 500 has a good weighting there, so it got pulled up. And the small caps were kind of a little bit on the sidelines. They still moved higher, but definitely the large caps were the leaders. If we take a look at the QQQ, you can see it's at a really nice, really started to kind of break above this kind of Trump bump and high that it formed right after Trump won the election. Now we're starting to see things run up. And it does feel like people are getting excited seasonality-wise. This is when the markets generally perform really well. And if we actually go and take a look at our strategies, you can see the SPY ETF is up about 7% from our entry price. You can see how bonds have gone the opposite direction to the downside. And that's the whole point of the CGS strategy, is to hold the asset that's going up in value and get rid of the ones that are out of favor. At some point, hopefully we'll get into bonds. I think bonds will play a very good opportunity for us come next year, early next year, hopefully. But until then, we're going to let this market continue to run higher. We do have the Nasdaq getting very close to its next target at 10%, where we'll sell off half of our remaining position, which is a quarter of our initial position. So we are in striking distance, literally a day or two away from hopefully hitting that and being able to reduce our exposure some more. At any point, this market could roll over. And the fact that we're starting to see things really pick up, we're starting to get some gaps. A gap to the upside and it's starting to run is usually a crowded trade. Typically, when you have gaps like we saw over here, we had a gap and it ran up, and another gap, it ran up. Usually that will lead to exhaustion and then a reset, or at least a sharp pullback, kind of like what we saw after we had the Trump bump and then kind of the reset back down. So I'm hoping we're going to go up here, hit this level, be able to lock in some gains on the QQQ, reduce our exposure, because at some point I think this market is going to have a pretty big correction. Now, if we take a look at the SPY, this is the same for the QQQ, but more or less we've gone from a time in this market here. It's hard to see the dark green, but we've gone in a time where there was lots of major fear in the market. And of course, when everybody is very fearful, the market wants to go higher. Even when it did bump, we had these orange bars. Orange bars tell us people are betting on falling pricing. They're nervous and they're positioning for lower pricing. And then the market goes higher, proves them wrong. And then eventually we get another bout of people betting on the markets falling. They get positioned, and then the market proves them wrong. And we've seen that again. We had orange bars here for the last few sessions, and now we've kicked back into a high gear. It's hard to see the dark green. Let me just zoom in a little bit here if I can. You can see we've got dark green bars and telling us that people are piling in, people are moving in, and hopefully we'll get another push a little bit higher so we can hit a target on the QQQ at least and lock in some more gains. If we go and take a look at the long-term picture, the TTI strategy, when we take a look at it, it's important to understand the overall tide, which we have a rising tide environment. 2022, the market pulled back 25% to the lows. It was very painful for anyone who didn't adjust and identify when the markets rolled over, during a time when most people suffered a 20 to 30% loss, depending on their portfolio holdings. In 2022, we ended up having a few trades through there and actually posted a gain of almost 6%. So about a 25-30% difference from a 25% loss for a lot of people at max drawdown. A negative year, we posted a positive gain. And that's where the real value comes in of CGS. It's a little bit more navigating the markets, but allows us to pull money out during a rising market, protect our capital, and still etch out some returns during a falling market, and then be able to ride this trend back up and continue to play these waves. Eventually, one of these is going to stall out. Now, I was just looking at the market internals for this longer term chart, and we still don't have, like when we had a new trend, a new tide starting up here, There's specific strength things that I want to see in the background, a lot of technicals and money flows. We had the same over here. These generated these buy signals, and over here is when we saw that trend flip. And believe it or not, this signal here was strong. We got a new bull market signal, but it has totally kind of weakened out, and it's starting to look a little long in the teeth. It's squeezing up here, kind of running higher. You can see it kind of did a very, very narrow range over here as well, and a little bit of volatility before it topped. So we still have the market not full-on raging bull market. Yes, the market's moving higher, but it's not a raging bull market. And I think we are still, I think we're still going to have a big market correction, major market top at some point, but we don't want to fight the trend. The trend is up, and we're going to ride this and take advantage to the upside with the CGS strategy. Now, if we go and take a look at where, let's take a little bit look here at the hot list of what the top performers were for the day. Bitcoin and blockchain sector were the biggest movers. Now, we didn't issue an official trade to get into Bitcoin. I did tell share everybody a week or two ago that I was getting into the Bitcoin ETF. We've seen a very nice move. This is the IBIT, which actually I'll just pull up the Bitcoin futures just because it's who knows what everyone else is looking at. There's a bunch of different Bitcoin trusts. But we got in, we saw a very strong pop and a rally up. And Bitcoin now had a nice move up today. It's testing this $100,000 mark once again. And what I like is Bitcoin has moved up in a very strong buying volume. It's bumping on this 100K mark, trying to eat through the resistance. There's obviously a lot of people still there saying, hey, if it hits 100K, I'm going to sell some of my shares. So it's eating through that overhead supply. And the fact that Bitcoin is testing and trying to break out, when we go and look at the blockchain ETF, this is the kind of stocks based around it. They've already broken out and they're pushing higher. And this is a very strong chart pattern. If you were in the mentoring session, I think it was the mentoring session, I talked about when you have a very strong trend and a big movement coming, you instead of getting a bull flag, usually you have a rally up and then the market flags down. And that's the halfway point for it to go higher. Well, sometimes you get this flagging up, which means there is a ton of volatility. It's increased risk. It could break either way, but it is pointing to leading the markets higher. People are moving into the blockchain ETFs and blockchain stocks, anticipating Bitcoin is going to move up. So they move into these leverage plays, kind of like when we like to see gold miners move up before gold does. This is kind of similar mentality here. And this is primed and ready for a pretty big pop, and is starting to break to new highs, telling us that Bitcoin likely could pop and break tomorrow or any day here once it eats through that overhead resistance. The next upside target is about 109,000 for Bitcoin. So it'll be pretty interesting to see how that unfolds. If we look at a bunch of the other ETFs in here, we have ARK ETFs. We got the AI bots ETF, cybersecurity hack, biotech. Definitely money moving into the very fast, aggressive, smaller caps and AI type of stuff. So people are getting very bullish. They're piling into the markets, into the small caps. That can be a contrarian indicator. I do think we're going to see this market rally up into January. And then I think January could be very interesting. We could see a lot of big selling. Next year could be pretty wild, and that's where we're really going to shine, where most people will lose their shirts and have to rethink their future. We'll be able to walk through these markets and navigate as they collapse and fall apart. We'll be able to pull money out and continue to actually benefit from the chaos where most people are suffering. And that's where real risk and position management and strategies come into play. When the market's just trending up like we've been seeing here, it's easy for the market to outperform our strategy. But when it comes into corrections, things that you don't want to experience, that you wish you could have avoided or profited from, which happen much less often, when they do happen, you definitely are going to be excited when we're able to take advantage of these. The market fell 35%. We were able to pull out a big return during the COVID crash. We pulled out a 5-6% return during the stock market's 25% pullback. And eventually when we're going to have something bigger here could be pretty massive upside potential for many years while most people are underwater. So again, a rising market, really we just pull money out, generally underperform a little bit, but we catch up and make up for it very quickly when the market starts to pull back and go sideways, where we continue to grow our account and other people are giving back all of their gains and all of that. So let's take a look at a few other things here real quick. If we take a look over at TLT, had a nice bounce today, up about 1%. I think there's a lot of volatility. I'm just get rid of some of these other charts here. There's a lot of volatility in the bond market. When we zoom way out here, I still think it is working out a bottom. I do think the bottom has probably been put in, but more or less it had a major top. You could even say this was a massive head and shoulders. Wherever you want to call it, it has gone into a stage 4 decline. Now it's trying to carve out a bottom. Wherever this bottom is, we'll see how this starts to unfold. Elevated volume, big volume spikes is definitely telling us there's increased volatility. There is a shift coming in, but Trump's got a real wild card. Rates don't look like they're going to fall all that fast. If inflation keeps up, then rates probably aren't really going to fall. I think he's going to come in. I think this time away from being a president, come in. He's probably seeing things very differently and had some real time to reflect. I don't know if it's going to be good or bad. I'm not saying Trump is good. I'm not saying he's bad. He's had time to reflect. I don't know how many other presidents, I don't follow them, but how many made it in for a term, lost it for another term, and then came back. I have a feeling it'll definitely provide some insight. And the fact that he has Elon on his side, either you love or hate both of them, I think it's going to make for some pretty interesting times, some very big defining moments, I think, in the U.S. and what's going on with the economies and rules in place. So bonds are carving out a bottom. They put in a major top at one point. Now I think they're putting in a major bottom. And we'll just have to see. I think there will be a time where we'll be able to take some pretty good advantage of TLT before the stock market goes into a stage 4 decline. So as the stock market does start to top out and fall, bonds should come into favor, and we'll be able to be long bonds while the stock market's falling. And eventually, when the market gets bad enough, we kick into a stage 4 decline and we start trading inverse ETFs. So as the stock market falls, the ETFs go up in value. So bonds and the dollar and the BIL ETFs will be our safe haven plays to benefit while the stock market puts in a top and pulls back and eventually enters into a stage 4. Once we hit a stage 4, we go into inverse ETFs. All right, let's take a look. What else we want to look at here? We've got gold. If we take a look at gold, is up a little bit today. Again, it's had a really nice move. It's had a series of bull flags where it just rallies, pauses. We had the COVID blip in here. Overall, massive move. It's been flagging sideways, massive move. And this was the 15-year cycle, Fibonacci cycle, and we definitely have volatility in here. So it's going to be interesting to see how this plays out. I think gold and silver will probably trade in this range that they've created for a while. I think they could go back up, maybe poke to nominal new highs. I don't see them taking off because once the stock market does top, which I'm hoping is going to be sometime in January, February or something, as the stock market starts to weaken, people will move into precious metals. They're still in that strong defensive play mode. And then eventually when the market does pick up speed to the downside, everything's going to get pulled down with it. And we're probably going to see like $2,100 gold at some point, which will be like X marks the spot for the start of probably a pretty exciting new bull market in precious metals and miners and probably other things, maybe uranium stocks as well. But uranium stocks might be a little bit delayed. Precious metal space should find a bottom before the stock market and act as a defensive play. And Bitcoin might be a very good play as well. We'll keep our eyes peeled for that. Other than that, let's take a look over at crude real quick, up 0.4%. When we look at crude oil and just kind of draw a line across this chart, it is obviously stuck. Either price is generally below this line or stuck above this line. Every time it tags it, it's depending on how you look at it, it's strengthening it or it's weakening that level. I would say it's acting as support. Every time it hits it, it's weakening. There's people who are buying at support eventually have built their positions and they don't want to keep buying. and people are trying to buy the bounce. I do think we're going to see a break to the downside. When we zoom out on oil, let's just go way back here. If we go way back on oil, we can just kind of draw a box, cut the highs and cut the lows off here of the price action. And more or less, oil is kind of like in the middle of its price range, really holding along this very critical point. If it breaks down, we're going to see $50 or $40 per barrel oil, and energy stocks are probably going to get hit very, very hard. So we'll just have to see how this goes. Maybe there's going to be another bounce in oil still, but I am pretty bearish on it. I'm bearish on the economy, but it doesn't matter how bearish I am and how all the data and stats are pointing to a bear market coming in the markets in general. We still don't want to bet against it. And that's what people do wrong, is they bet what they feel is going to happen and what they think is going to happen. They get in position and then they just get slaughtered, versus just ride the trend. Until it's proven that it's reversed, then we get out. And that is the key with the strategy that we do. We don't ever have to predict anything. And it's really, we just ride the coattails. Identify the trend, make sure it meets our criteria, and then manage our position. Get on board that trend. Silver, if we look real quick, pretty ugly looking chart as well. Much uglier actually than gold. It's kind of moved up. I believe it's kind of hit a major resistance level. It's hit its measured Fibonacci move. It's pulled back. Again, I think gold, silver, and miners could hold their ground and put in a bit of top here. And eventually, I think they're going to sell off and have a fairly big reset. Same with miners. They're all the same trade. Other than that, I think that's about it at this point. We'll see how the markets unfold and go through the rest of the week and take it from there. Talk soon. Bye-bye.